morning. You're watching Business World Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our top story. The country's factory output slumped for the 11th straight month in January. Preliminary results of the PSA's monthly integrated survey of selected industries, as measured by the volume of production index, showed that factory output fell by 16.7% year on year. This was faster than the 12% drop in December of last year and a reversal of the nearly 2% growth in January of 2020. Manufacturing has been on a decline since March of last year when lockdown measures were implemented to curb rising COVID-19 infections. The PSA said 18 out of 22 industry divisions recorded decreases, including manufacture of machinery and tobacco. The January MISI marked the first time the PSA used 2018 prices compared with 2000 prices used in the past surveys. The IHS Market Manufacturing PMI, which utilizes a different set of rules, posted a 52.5 reading in January. That's above the 50 mark, which separates expansion from contraction. Union Bank Chief Economist Carlos Asuncion said the latest BOP may be a momentum of decline given the expansion in the PMI. He said the increasing demand may not have been translated yet to the increasing factory output. Meanwhile, SAP President Dan Lachica attributed the electronics sector's decline to the ongoing pandemic-related disruption in supply chain and operations. Despite this, Lachica is forecasting a 7% growth for electronics exporters. That's a turnaround from an 8.8% decline in 2020. Volatility is the name of the game, with a rebound overnight in Wall Street, particularly in growth shares, and that sent the Nasdaq 100 to its biggest gain since November. Now recall, guys, this comes after the shares rotated away from the growth stocks into cyclicals, with the Nasdaq having had previous to that one of the worst days in recent months. So let's take a quick peek at Asia Pacific on how the stocks are doing this morning. Now recall that Chinese stocks will be back in focus after state buying on Tuesday actually failed to shore up that market. You can see the open markets, however, in the green here. The Nikkei 225 up by 0.2%. However, over in Singapore, you can see a bit of a pullback. The FTSE Straits Times down by 0.3%. Let's take a quick peek at how our own index is opening. This, of course, comes as we saw quite a big support level being breached yesterday. This, according to Manny Cruz of Papo Securities. He says that Philippine stocks have reached a critical junction that could spell more losses. He says that we are Asia's worst performing equity market year to date. We've sank more than 5% so far this year. That's as the rest of global equities have actually staged quite a rally. Now, he also mentioned, and you can see this on my chart here, how we have breached, at least the index, a 100-day moving day average. This is a support level that we have held since our record drop last March 2020, and previous major breaches have actually resulted in the index suffering even more decline. So another thing to be watching out for, he said, is the rising inflation and, of course, infections. This as we open in the red, down by 0.6% to 6,700 levels. Now, I have a couple of earnings to be reporting here. First is Petron. That staged a fourth quarter net income of 1.4 billion pesos. That's on the back of fourth quarter revenues reaching 69.6 billion pesos. Now, whether this is positive or negative, that actually, at least for the fourth quarter, means a revenue jump of 46% from the low that it felt in the second quarter of 2020. So again, close to 50% increase, at least in the fourth quarter. Nevertheless, if you take a look at profit, you can see that Petron's net losses in 2020 were at 11.4 billion pesos. That's versus a net profit of 2.3 billion pesos the year prior in 2019. And also, when you take a look at the full year 2020 revenue at 286 billion, that's down 44% year on year. Now, what are they planning? They're hoping to resume refining by second half of the year. Recall that their Bataan refinery has been temporarily shut down. They also mentioned that in the fourth quarter, the sales volumes were up by at least 7% from the second quarter, and they're anticipating higher demand and more stable situation. This according to their president and CEO, Ramon Ang. Petron here, however, sliding a touch amid those earnings. It's down 0.6% to 3 pesos and 42 centavos. And another one that I want to focus on this morning is AC Energy. They going to the other way. Petron saying that they have a net loss for 2020. ACEN, on the other hand, reported a net income of 3.87 billion. This is at least 29 times higher year on year, and this is on the back of revenues from their electricity sales rising 26% to 20.3 billion pesos in 2020. They are now at a trading halt this morning. That's as they've just announced that they're selling 11.9 billion pesos of shares to GIC's Aran. So that's going to be 4 billion shares valued at 2 pesos and 97 centavos each. This transaction will be closing on March 18, and the proceeds will be funding AC Energy's projects and also debt repayment. So Aran will also be purchasing additional AC Energy shares, and ultimately they're looking at a 17.5% stake in the energy company. So very interesting here, watching to see how AC Energy will be trading after that 1 hour trading halt. Okay, guys, checking in on the other headlines we're keeping our eyes on. This year's economic recovery will likely be slower than expected. That's due to a delayed pickup in construction activity. This is according to a joint report issued by First Metro Investment Corp and University of Asia and the Pacific. The groups have turned more cautiously optimistic about a quick rebound in 2021, citing institutional or structural factors. They say the construction sector will likely remain a laggard in the first half of the year, with small contractors still struggling financially on slow demand. But activity is expected to pick up in the second half. That's ahead of the 2022 national elections. Recall that construction contracted by 26% in 2020, helping drag GDP down to negative 9.5%. However, the report said economic recovery may finally take place in the second quarter. It noted that second quarter GDP would come from a low base, as the economy posted a 16.5% contraction during that same period. In 2020, recovery would also hinge on the rollout of vaccines and easing restrictions, according to this report. Now, local employers are looking to prioritize the restructuring and reskilling of their workforces this 2021. Consulting firm Mercer says business owners are gearing up for any changes that may be brought about by the pandemic. This is why 2 out of 3 companies are planning to review their employees' flexibility at work, while more than 50% are looking to upskill their talent pools. Mercer's career business leader for the Philippines, Floriza Molon, said companies are slowly adapting more flexible business models to take their workforces competitive and future ready. Now, the Labor Department insists imposing hard lockdown measures in the country is not an option. That's on the back of the PSA's latest report on unemployment figures for January. Labor Secretary Silvestre Bello III told the Philippine Star that we cannot afford to implement stricter quarantine rules or we risk losing jobs again. However, in an interview with 1PH's Sa Totoo Lang, DOLE Assistant Secretary Nikki Tutay said at least 1.4 million Filipinos have already returned to work since the pandemic began. Tutay explained that is mainly due to the resiliency of the BPO sector that proved to be an essential industry during the new normal. For now, the department echoed calls to strictly observe health protocols. At the same time, the DOLE is also pushing to include minimum wage earners in the vaccination priority list.
Palihim Bebot Bello, lalong-lalo na po yung mga minimum wage earners po natin, kasi ito naman po ay sabihin na po natin na walang masyadong kakayanan para po maabot yung bakuna. Kaya po pinupush po talaga ng ating kalihim Bebot Bello na maisama po sila doon sa priority list. At ngayon po ay inahahanda na po talaga namin itong mga listahan na ito, kasi alam naman po na namin, may datos na po kami mula po sa establishment report system po namin na kinakalap din at isinasabit po sa Department of Labor and Employment. So ito po yung initiative na ginagawa ginagawa po ngayon ng DOLE para mabigyan po ng prioridad ang mga minimum wage earners po natin ng mga manggagawa sa vaccination program naman.
The pandemic has changed the ways in which we live and work with a renewed focus on how data is managed. We have with us Tony Gaunt, VP Hyperscale and Colocation of Vertiv Asia and India, to share with us some insights from Vertiv. Of course, this is one of the largest providers of critical digital infrastructure and continuity solutions. Good morning, Tony, and welcome to the broadcast.
Good morning, Danie. Thank you. Pleasure to join you.
Tony, on the one hand, we've seen tech firms just rising during the pandemic. They seem to have become the superstars, and everybody has been talking about digitization accelerating, and these trends having been there even pre-pandemic, now seeing the limelight or the light of day.
Mm-hmm.
But on the other side, you've seen the pandemic also expose loopholes when it comes to readiness to take this on. What type of loopholes are you seeing, particularly in the Philippines?
I think we've seen a few loopholes, but we've also seen extreme resilience in business and SMEs as well to actually adapt to the flexibility working from home that's required. The BPO sector in particular, people are actually prepared to work from home. They've really made the effort to continue to succeed and deliver. So I don't necessarily see it as a loophole, but what we have seen is definitely from a data center perspective is the way that we are now becoming a fundamental utility to the world now. We are now sitting there alongside electricity, water, gas, and telecoms in terms of the criticality of our industry. And what that's provided, as we've spent, in particular the last year, as everybody's adapted now, is we're providing the access for the SMEs to global accessibility to new markets, to new sectors. We're obviously seeing, as you say, the US tech stocks continue to balloon, but that's because we're actually using their services. So social media, search, video on demand, gaming, video conferencing, online retail are all driving these stocks higher and driving the demand of that connectivity and the mobile access that we all require. And when we think about the Philippines, we have so many communities in islands where that accessibility is critical for them. So long as we're providing that access, the networks are coming in place. We're seeing the development of 5G and the telecom networks to actually provide people with that connectivity. So I think there's still a lot of growth coming in the sector. From Philippines' perspective, I think there's a very good opportunity to expand at greater rates than we've seen in other countries, because there isn't the large data center and cloud infrastructure in the Philippines yet. Mm-hmm. Definitely happening in Manila, developing in Cebu, definitely coming along in Mindanao as well. But the Philippines has that great opportunity where it can learn from what other countries are doing. It has the community, it has the population that wants mobile access, wants data. And so I believe that we'll actually start to see data centers being built, developed around the Philippines at a greater pace than we may have seen in other countries where people are still learning how to do it. So from a market perspective, the opportunity there from an investment perspective, the ability that there's a lot of money being around by the investment companies as well, but both in PE and VCs. So, there's significant opportunity within the vertical, within the market sector for the Philippines to grow and continue to develop.
Okay, thank you for that. Tony, you mentioned you see the trends moving towards utility type status here. And you mentioned that we actually have had this sort of industry already quite present here in the Philippines, but that might have been limited to certain sectors that were already very keen on this digitization shift to begin with. Mm-hmm. How difficult or will it be for other sectors to actually catch up? And you mentioned the MSMEs. How will they be able to tap into this utility type data-driven technologies?
Well, I think when we think about how businesses run and how businesses transact now, everything's very digital to start with. And it may surprise many people that you're already working within the data center sector. You're already using it in your transactions, in your cloud activity, whether it's storage, whether it's the financial transactions, whether it's dealing with a consumer on a retail website, whether it's using Waze from a traffic perspective. It's already happening, but it's always been that utility in the background that people haven't necessarily been aware of. And especially now that we've seen the world go to a lot of video conferencing, it doesn't matter which technology or platform we use, there's that realization that that demand for instant accessibility, low latency so that we're always connected as fast as possible, is now becoming mainstream for people. So I believe we're already using it, but just maybe the wider community is not necessarily aware just yet.
Okay, and how long exactly? It feels like we're in a transition phase, right? Where everything is still experimental for a lot of businesses, especially here in the Philippines. Even the infrastructure is starting, we're starting to feel the groundwork there. But how long is it going to take to feel this ecosystem, to feel that we're there, that things are secure, efficient, and actually start trusting the system and complete shift towards these new technologies?
That's a very good question, and some of that will depend on business adoption, any requirements from the government in terms of data security. The data security is always a question for people. The BPOs are already using it. So I think it takes typically to build a large data center, maybe a year to actually build a large facility. But in many cases, a lot of the data that's being used in a transaction perspective is already either hosted there within the Philippines. Potentially it's offshore, depending on what we're using, say from a social media perspective. But it sits within people's businesses already in their IT, in their data, in their servers that they're already using.
Tony, how competitive are we still as a BPO hub and just data center hub in the Philippines? You've mentioned this several times. And how has this positioning changed during the pandemic? Are you seeing more interest in actually coming here to the Philippines, or has it been difficult for them, just like in any other industry?
That's quite a complex question because we're still in the pandemic, I guess, and industry and communities and businesses still working and still adapting. But business has continued along. I think from a BPO perspective, sure, there's been a little bit of research where the Philippines has dropped off a little bit in terms of where to go in terms of a technology country. But it's a fundamental service and a very important service provided by the Philippines for the region, for the world on BPO. So I genuinely don't believe that will disappear. That won't go. We need to have the BPO processes in action here. From a data center perspective, that's going to depend a little bit in terms of how demand increases. And you typically find it's the telecoms and, again, those large tech organizations, the media and the search organizations that look at whether they want to come to a country or not. They look at the cable access that's landing. But that's happening. We know for certain that's happening. I can't say who, what, where, but that is definitely coming into the Philippines at a much greater pace than we've seen previously. So I think we'll see the growth in the next 2-3 years for sure. And remember that the industry as a whole around the world is growing at various estimates between 15 and 20% CAGR. So it's a significant investment opportunity and a benefit to the country.
Okay, so still going to be remaining one of our stronger legs as we get through this recovery period. Thank you so much for those insights, Tony Gaunt, VP for Vertiv Asia and India.
Thank you.
And that's a first look into the business day. Today's Wednesday, March 10, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, and stay safe, Philippines. We are One News.